same time, learn a lot more about Headstart. Uh, I'm sure that as we work with our ecosystems, we take a lot of pride in terms of what we are able to make an impact with our ecosystem. And now imagine if we are able to understand that impact across 20 odd of our chapters. The sense of pride, the sense of accomplishment that we can get as an organization is huge. And I think that is one thing that we are really excited to bring about as part of 2.0. And along with that, we also wanted to make sure that as volunteers, we continue to learn and get better in the field of entrepreneurship, in the field of startup, and help our startup buddies, our ecosystem as well. So the HS Catch Up is all about helping our volunteers learn more about Headstart and things that will help Headstart make successful. So with that, I would love to bring our first session live with the first ecosystem we're going to deep dive on. Recently we had our own celebration retreat, and we talked about some of the biggest achievements. And one thing over there that we had was our ecosystem, most impactful ecosystem player, right? And one of these chapters that won that, they have come through a long way, facing a lot of challenges and making a very big impact. I know we have all heard stories about how this chapter has been doing a fabulous job over the past few years and continues to make a very big impact in their ecosystem. And we wanted to, get their team on here, talk about how they are doing it, what they are doing it, and, get to know a lot about the impact that they have created. So with that, let me bring in Harshdeep, the lead for HS Raipur. Harshdeep, we would love to hear your story on how awesome is Raipur and how are they doing this?
Thank you. Thanks a lot, Taha, for giving me this opportunity to, go, the first. And I think it would be a great session. So I'll just share my screen. So, hi guys, this is Harshdeep, currently leading Raipur chapter. And so I've been told, to present the entire journey from the beginning about how Raipur's ecosystem and Headstart Raipur has evolved during the time. So the first and the foremost part, to even introduce any chapter or even to introduce any initiative, either Headstart or any of its initiatives, I think this is the most important thing which moved all of us at Raipur. So I think there's this guy, Akhilesh Agarwal from Code Nicely. He's the founder of Code Nicely. And at a very huge public forum, he announced that he owes every ounce of his success to Headstart. I think that's really something to see, and that's really something to know whenever you are into something, and then you believe that you are part of something, the great initiative, correct? So Headstart Catch Up. So I'll tell you, how the entire ecosystem of Raipur and how the entire ecosystem in and around Raipur evolved. So we started in 2016. A lot of people, didn't know about what the startup ecosystem was. It started from no ecosystem to being among the top tier 2 ecosystem, from 12 active startups to 250 plus active startups currently in Raipur, with no incubators at all. Now we have 2 major incubators into different domains. And a fun fact, these both rank top 3 in India in their respective positions. From no co-working spaces to 10 plus co-working spaces whom Headstart has helped to evolve and grow. No startup event at all to series of startup events wherein we have been consistently doing a lot of Headstart events and under different initiatives, with limited mentors to now national mentors. With problems like unemployment, these startups have been providing jobs to more than 700 people across sectors, from no volunteers to no volunteers, a small event to becoming a brand in Chhattisgarh, correct? And finally, from no corona, and now we are saying go corona. So I think this has been a fantastic journey, and the ride was not at all easy. We had our own set of challenges, and this is how it started. So a lot of people, whom I spoke in Headstart, whether it's a central team or any other volunteer. So many of them are under an impression that the Headstart Raipur chapter started in 2016, September 2016. But I think that's true. But it started way back in 2010 when the founding member of Headstart Raipur, he attended a Headstart event in Delhi in 2010. April 2016, when he climbed up the ladder and reached out to Gautam and Amit, they were very skeptical to know, Raipur, really a tier 2 city? Should we, really start a chapter? Would it sustain? How it would be? Would it hamper our growth? So, and trust me, that was the day, September 2016, Raipur witnessed the first entrepreneurship event, first government partnership, first networking event for startups. Correct? It was not at all easy. It was the efforts of the entire team from Central, Divya Kathwani, to pull it off. And it took the efforts from April to September, the 4 months of efforts, to really pull it off to a certain level wherein we expected 50 audience at max. We were overbooked by 200%. We expected no audience at all. And there were people who were sent back home because there were no seat to sit. Correct. So we are completely jam-packed. That this does not mean because we were very first, so we had a first mover advantage. But I think this was because we had our own set of challenges, whether it's education, whether it's awareness. Till then, people only knew Ola, Uber, Swiggy, that these were the startups. They didn't even imagine that this entire gamut of ecosystem could evolve in Raipur. So during this journey, we have created a lot of impact. Along with that, we have successfully achieved a lot of milestones. Correct. So whether it's Headstart initiative or going into some different initiatives. So these were the key initiatives that we pulled it off in these 4 years. Headstart hire, 500 interviews, 1 hour, 10 startups, jotted down into technical and non-technical. It was a great hit. No one would ever imagine that this could happen in Raipur and so many people could actually get a job out of this. Startup Conclave, we celebrated 3 years anniversary at Raipur, depicting 1,000 days, impacting 1,000 lives. From 250 plus attendees to 5 speakers, calling out every single speaker who had been on the Headstart Raipur stage, calling them as a part of this event, 12 plus demo stalls, and 5 startup pitch who were the first one to pitch in front of the audience for the very first time. HS Plus, we did it in February 2020. The largest event we would have pulled it off. 350 plus attendees, 15 speakers, a great set of speakers, 10 plus demo stalls, a startup pitch, a lot of curation, networking, and a lot of evolution. ESL Student Initiative, we do a lot of student and ESL initiative because it's a very nascent ecosystem. So we have been working with 20 plus colleges across 6 cities, impacting 1,500 plus students in and around Raipur and Chhattisgarh. So when we started this initiative, we thought why not to collaborate and do something different altogether. So these were some of the initiatives which we pulled off on a different level. So when Raipur is called upon as a best chapter in non-metro, so it is not only because we did some events successfully, it is also because we did some of the events completely off track with the normal initiatives. We did Sports Fest. Shrikant Soni was the witness for this grand success. He was the commentator for this particular event. 10 plus startups, 3 sports, 50 plus attendees. And it was huge. The kind of bond, the kind of attention that we grabbed from this particular event was next level. For the first time, we tried Startup Roast, wherein we called upon startups and investors roast them in front of the audience in terms of why they're doing what they're doing. For the very first time, we called upon local investors to do a stand-up. All this initiative was attended by 50 plus attendees. Now, on a serious note, we helped this organization, LP4Y, which is a French organization, and you'd be surprised to know that this organization is backed and guided by UNICEF itself. 240 underprivileged children They don't want to work with anyone. They don't want to work for anyone. All they had a dream that they want to start something on their own. So I think this was the point wherein every single volunteer of Headstart contributed and took 5+ workshops in giving them the skills that they require to start, or if not, then if they want to take something as a passion or do something as to work. This was the initiative which is very close to our hearts. Apart from this, we do a lot of industry collab. So to give you a brief, Chhattisgarh ecosystem is industry dominated ecosystem. We have a lot of industries and businesses in and around different sectors, whether it's steel, whether it's cement, whether it's real estate, whether it's mining. So we have these major industries, and we have 5+ major industry organization collabs across the state. And we have successfully provided these industries some innovative challenges through our platform, whether it's real estate, whether it's steel, whether it's mining, whether it's any other industry as per se. We have been rooting for traditional businesses who do not understand what technology can do for you. Through our ecosystem and through our platform, we have been able to reach out to these businesses to take their businesses online, to take their businesses to a national presence, to even allow them to take it to a next level and expand into multi-horizons. We have been collaborated with EO, JCI, CII, ICI, and a lot many industries to help these players to evolve in alignation with the startups. So I think that has been the major milestone. But these specific milestones, some of the milestones created a huge impact across various sectors. So if we look at the impact and look at the ecosystem as a whole in terms of every stakeholder involved, so these were some of the impacts that we built in these 4 years, wherein in first 2 years, we focused on education and awareness because that was something very real and challenging for us. No one knew what startup ecosystem could do, what startups can do. But something in the next 2 years, in the later 2 years, we focused on growth, bridging this ecosystem to national presence, and these were the impacts to look for. If we talk about startup growth, Code Nicely, who said his success is owed to Headstart, he was inspired to start his idea at a Headstart event. He was inspired to start, he got his first customer through Headstart. He got series of customers through Headstart event via networking. That was the impact that we see as our success. That is the impact that we crave for. Every single volunteer at Raipur, we have our own startup buddies, and eventually, coincidentally, these startups are now the most prominent startup in this ecosystem. I'll tell you later. As a volunteer at Headstart, apart from the central initiative that we have for COVID, we did something that only a local ecosystem player could do. We reached out to our network startup founders. We understood their challenges. We curated the challenges, and now we are planning to do some regular events in and around those challenges to address that and to cater to them. The most important part of this ecosystem was the first incubator, that was 36INC, and to your surprise, 90% of the first cohort was supported by Headstart Raipur. 90%. Industry Innovative Solution, a huge industry into steel giant, asked one of the startups to give them solutions into IT in some of their areas of challenge. Mobile 10X, a renowned virtual incubator, came to Raipur just because Headstart has a presence in Raipur. We have been able to give the national exposure, whether in terms of global mentors, whether in terms of national mentors, whether in terms of some really good investors that has been kind enough to come to Raipur and give this ecosystem the exposure they need. The most important part, we not only focus on the external ecosystem growth, but we also focus on volunteer development, correct? So I've not written the name for the first one because I wanted to tell you, this guy was helping students to clear CAT. Now, this guy is the CEO of Great Lakes Institution in Chennai. This has been the journey, and this guy was a volunteer with Headstart. He is none other than Saurabh Chaubey. He also remained CEO for 36INC as well, and now he is heading the incubation center for Great Lakes Institution in Chennai. Divya Prithwani, he's been known as a godfather of this ecosystem, wherein he went from starting up to failing first startup and to successfully now running the education and HR startup on his own. Tushar Vadera from IT services to being the most funded startup in Chhattisgarh. Correct? This has been the journey wherein we have addressed volunteer development and the external ecosystem as a whole. So these were some of the prominent startups, and coincidentally, no kidding, coincidentally, these were the startups who each of our volunteers have been mentoring them personally, and these can be called as a startup, but some of them. So these were the prominent startups who are ranging from edtech to social impact. Some of them has been a winner of a Kickstart initiative that we run nationally. Minocular was one. Gymbooks has been continuously prominent in the national Kickstart initiatives, and some of them has been really active in providing some great solutions to these industries in and around India as well as abroad. So all this initiative, all this impact, every single milestone that has been achieved because of the team, because so the great thing, the other day I was talking to someone at Headstart, and they asked, what's so important about your team? So I told them only one thing, if you talk to us, any volunteer at Raipur, obviously this can be true for every volunteer at Headstart. This is true for every volunteer at Headstart. But if you talk to someone at Raipur, Headstart Raipur, and you talk about entrepreneurship, about startup, about an idea, about starting up, about addressing those local challenges, there would be a sparkle in their eyes, and there would be curiosity to cater that challenge and to help to bridge that ecosystem. We all are entrepreneurs, and this is something I said to Divya Bhai and Tushar Bhai when they finally approached me, to what Headstart is. So these guys headhunted each and every one of us. No one was directly gone through the normal process. So I call every one of us the chosen ones. We all are entrepreneurs. We all belong to diverse professionals. We all have some entrepreneurship kida in us. We all are running our own successful startups, and obviously they have a Punjabi with them. So meet our rock stars. Divya Bhai, the godfather, the fixer. If you want anything, and if you are you are stuck at something, Divya Bhai is your go-to person. Tushar Bhai, someone who is always by the rules, someone who has always been doing some great stuff, great initiatives, a mentor. Namrata, not a lot of many people know that, but Namrata is a trained Kathak dancer. So a kick-ass company secretary. Naveen Bhai, a UI UX designer by profession, but doing some really crazy things into agri-tech and farming. Nikita, she's a multi-talented girl, whether it's content, whether it's social media, whether it's engaging anyone, whether it's AMAs, you name it, and Nikita has done it. Kritika, running multi-ventures with her family, whether it's doing some manufacturing for hinges, whether it's running a stockbroking firm, whether it's a chartered accountancy practice. She has been the finance girl since the beginning. Mayank, the continuous support for each and every one of us, the newest recruit at Headstart, and he has been helping us a lot. So when we talk about initiatives, when we talk about the team and the evolution that the Headstart has brought up, so we have been praised by several media in and around Chhattisgarh for doing some really great things, whether it's whether it's Hire, whether it's Startup Conclave, whether it's HS Plus, even the Startup Roast. So why the love is, that's not because there's no other ecosystem player available. There are various couple of ecosystem players available, whether it's VCatch, whether it's TIE, whether it's TIE has been curating a really good initiatives in and around Raipur, but I don't know, for some reason they're not working out. But some really great prominent players in Raipur, but we stood apart because we curate and address two grassroots problems that we really care about. We have been able to pull this off really successfully. And going forward, the only thing we want for the next 6 months would be bridge this ecosystem. This has been a really great opportunity for us because everything is going virtual, where the reality is the new virtual and virtual has become real. We want to bridge this ecosystem from global mentors, global exposure, bring it to the local ecosystem and address this specific customized challenges that these guys face. So this has been the journey. And this is Harshdeep. Thank you. If you have any questions, you can definitely ask me.
Wow. Uh, Thanks, Hardeep, for this one. I think this was, I know we had given just 20 minutes and really tried to, compress all the things that you have done in that time, which I'm sure it's very, very hard. But, for all of us, hearing about Raipur and that has been superb. Let's open up, let's hear some questions. People can talk about it in the chat. I know the chat is going on fun over there as well. And or just unmute and ask things about Raipur.
Okay. So if no one is asking, I'll go ahead and ask. I have a bunch of questions to the Raipur team. So guys, you have been like super inspiring, and the kind of structure, the kind of impact which you have been doing, I hate to say that people classify things as tier 2, tier 3 and tier 1, but you have been on top of charts for Headstart, and the way you guys presented your story, kick-ass. So a couple of things which I wanted to check on is, one is the team, and team plays a very, very crucial role if you don't have the right set of people. And while you said that every of your volunteer has a sparkle when you talk about entrepreneurship, I know that if I go to any of the volunteer in Raipur, they know in depth about entrepreneurship and they can actually support a startup, which at least I'll only talk about my team, or I'll talk about myself. I think, still feel a lot of Headstarters lack that. So if you can talk about how do you shortlist such an amazing team, how do you get them together to create impact month on month and year on year? So I have a bunch of questions I'll ask that will give opportunity to other to answer. But this is the very first question that I want to understand on.
Taha, a quick point here. Can we probably have the entire team answer?
Yes, I think the entire team can.
Because all of them together want to chip in can. They've all been a part of this successful journey.
Totally. So I think the one request, all the team members, please, turn on the video. We would love to see all of you guys talk and see you. So we have Tushar now.
Can we have the team Raipur here, guys, please?
Yeah.
Naveen, I love your hat. Love it.
Oh, Divya sir, yes.
So I think that answer which, that question, the answer to that question which Oji asked, I think Divya Bhai and Tushar would be the best person to answer that question. And I think they did some really great job in recruiting the entire team.
So Divya, would you like to answer it?
Take it up, sir.
भाई ऐसा ना हो दिव्य कह दे कि कोई और था जो आंसर करेगा.
Sure.
Okay, before Divya Bhai and Tushar start, so I'll just give you a quick what happened to me when I was introduced to Headstart. So Divya Bhai came to my office saying that I want to talk something really important, and we discussed about Headstart and startups for approximately 2 straight hours. That's when I decided this will be my next go-to organization before starting my journey with Akhilesh as well. And I think that has been really helpful. Those 2 hours, Dev Bhai has been telling me all about what great initiatives and how we can be part of something great. Over to you, Dev Bhai.
So for me it was always with the conversations which I had with the people, and always, I mean, I could if I could sense their hunger to learn, grow, and help others. I mean, that was the only. If I could sense that, then yes, I would invite that person to the team. That was my thing in the first 2 years of how we ran. In fact, the first when we launched the chapter, we had 5 guys. I mean, coming to me asking that they would love to join as volunteers, but I mean, we could get on board only 2 of them because probably the other 3 I couldn't sense those 3 things. So that's about it. I mean, there was no other, matrix or.
Yeah, same, more or less same is the case with me as well. So in almost all of the events we get a lot of volunteer queries, but because it is a small ecosystem, we mostly know each other via some of the other references. So if you come to me, we would definitely be having some mutual connect. So there are even many friends who have applied or who wanted to do it. Just to recall, there was a lady, if I won't name, but there was a lady who was super interested to become a volunteer. She has almost approached all of us. Like Divish, she has approached multiple times. Harshdeep or maybe Namrata would remember. So there are many people who want to become. But when we sense that the reason for them to become volunteer is taking, not giving, so we actually avoid that thing. So we even did not, ask her to fill up the form or things, because we know that she is not a match. So, in most of the cases, we actually know the person who is going to apply in advance. And then, we see that, okay, this person is doing something good. So almost all of us who became volunteer, before becoming volunteer, we were actually interacting with each other. And the team knew that person in advance.
And just to
We do
add
look
there,
at as well.
just to add there, I think the team right now has a mix of people who all the folks are an expert in one of the other function that helps in run the business. So, that makes the team highly equipped to at least help at a basic level any startup, early stage startup who would want to start or facing initial hurdles. So right from a CA, CS, marketing guy, HR guy, a tech, all of us, I think, have that one or the other functional expertise, which adds to the overall value, I think.
So you don't onboard anyone who is not an entrepreneur?
Or no, there's no,
that's not a rule. That's not a rule. That is just a coincidence. So we do not intend to do it actually.
Then another beautiful coincidence that I saw on the chat, that I think you are the only team with such a beautiful diversity of 50 plus.
Yeah. Gender equality. Yes, I think the best part is once we have a meeting. I remember having a meeting for HS Plus or any of the event for that matter. When we sit together in a room and we discuss about something we want to have this and do this. So beautifully, no one talks about the roles and responsibility that everyone is going to have. We just disperse after discussing the idea, and we disperse, and we eventually we know that what we have to do. So each and everyone start initiating on their own without telling the other person that this is your roles and responsibility. I think that's very beautiful to have.
I think amazing amount of learnings, for all of us in a way, in terms of, how do you go about building a team? Be it the diverse nature, be it, very different, but all having the similar philosophy, the process that they have taken to, get them, and just beautifully, the complementing skills that they have, right? I think one of the biggest reasons of both the motivation and the honesty towards the work is amazing. I think one of the biggest learnings for all of us, 100% for sure, is this part. So we are on time, and I'm sure there's going to be lots more questions, and that's why we want to, take this to the HS Random. So we don't want just this conversation to end over here. Any more questions about Raipur, anyone that you want to know about? I think Random is our group. Let's post things over there. I'm sure the entire team would be very happy to answer over there. And with that, we'll actually, before we move to our next part, I have one request. There is a link on the chat. I want everyone to just click on that. We have a couple of things. Chris, workplaces yet. We still go with Random for now.
Chris, hold the horses for a while. Still there.
Okay, so we would love to do just a small poll to get what next. So one question, which is the next ecosystem you'd love to hear about? Right? My vote goes for Gurgaon, but let's see what others have to say as well.
Taha, stop polluting the poll.
Gurgaon.
I'm just sharing my perspective. You're happy to share yours.
I'm on chutti for next 3 weeks.
Indore should go next.
Yeah.
Take part in that poll, no, and answer, please. I have shared a link.
Jabalpur. Yes, Jabalpur is good. Indore is good. Jaipur is good.
Oh,
We should talk about areas where and ecosystems which are doing good stuff. Why do you want to listen about
Just say
Gurgaon?
you've done such amazing stuff, man. You've moved from Bangalore all the way to Gurgaon, and you've like almost started that entire ecosystem up from Headstart's perspective on your own. We really want to listen to that story. It's amazing.
I see some spirit of jealousy in Akhilesh's tone. Taha, can you relate?
And I am.
Taha, you're muted. Taha, you're muted.
I'm gonna button with a segue there that now that Akhilesh is here. Guys, so as we said, we have multiple sessions planned today. So let's move on to our next session with Akhilesh about understanding the investment landscape. Akhilesh, over to you.
So folks, just a quick, first of all, Harsh, amazing presentation, man. It was really inspiring listening to what Raipur has been doing. I know some of the Bangalore folks are in the chat as well, and we are going to go back and in our weekly team call have a chat about this and kind of see where we can leverage, your insights and the wisdom that your team has given Headstart over the years and kind of try to implement them in Bangalore as well. So that was an amazing presentation, and from here on, it's going to be a nosedive in presentation quality, but we'll still try to keep the audience engaged in whatever way I can. So that being said, folks, I want to quickly set the premise of this entire kind of presentation in the, kind of from the perspective of what, we are looking to help the entire, Headstart volunteer base with. So over here, the idea is to keep it basic, kind of impart knowledge about the basics of, what VC investing is like, on a very broad spectrum, right? So we are not going to go into very, very specific details. So some of you may already be very, very well versed with the venture capital ecosystem in India. Some of you may not. This caters to an audience that is somewhere in between these lines, right? That who want to learn more, or maybe you want a refresher on how things currently work. And this is more so also for the juniors who've joined us recently and who kind of are going to be on this interaction basis with startups. And the final takeaway for you from this entire presentation should be that you should have an educated conversation with a startup founder. You should be able to speak to them about intelligibly about what their startup journey should look like in the coming few years. Because when you approach a startup founder, they are looking at you as a head starter. They will look at you for answers. Although you can't provide answers at any given time, you will be able to give them insights. Because my firm belief is that you don't have to have clear answers. Because when you have unclear answers, you will start questioning yourself and you will start debating with yourself and the person in front of you. And that's where insights come out, right? So that being said, folks, let's jump into who I am. So folks, whenever you're in Bangalore, please give me a call. I'm more than happy to go out and treat you for whatever, a beer, a drink, whatever you want. And let's have a good time. I have worked in investment banking at Goldman Sachs for a couple of years, after which I worked with an investment firm in Bangalore. And I'm always on the lookout to invest in startups, although I have invested in none. So yeah, there you go. So folks, the agenda for today over here is that we are going to be talking about what an investment is, very basic. Then we're going to be moving on to what the journey of a founder looks like in terms of raising capital. What is the investment landscape in today's scenario? We'll kind of just quickly have a run through of a few companies that are making very niche and focused investments. And then if you are a head starter and if a particular startup founder asks you, hey, listen, man, I don't know who I need to approach for funding. I'm really upset. Please help me out. This is what you're going to tell them, right? And that's what I'm going to be telling you in the last section right here. So folks, before we move ahead, can you quickly tell me, what is an investment? Like what, according to you, would kind of compromise or rather would comprise an investment? Like how does it work in your mind? Like, when I say investment, what figures in your head?
So I'll go here. So anything which basically where you put in some amount and you get a better ROI. Now this something could be in terms of effort, in terms of money, in terms of anything, in terms of the energy you put in. Basically, getting an ROI, getting a better ROI to what you put into. That's investment for me.
Absolutely right. Would anyone else like to kind of separate, kind of give me a deeper dive into what an investment really is? What are the different forms of investment? So Rahul covered the first part, which was absolutely apt. Okay, cool. So let's kind of quickly take a look at what Rahul just spoke about, right? So it's basically some amount of money given to an entity to get more money at the end of it. Right? That is an investment. Is it different from funding? Can someone answer that question?
I don't think it's different in this context. Maybe personal investment might be different, but I don't know. I don't think it's different in this context.
Okay, so let me set the context a little better. When we're talking about investment, we're talking about investing in startups. So from that perspective, an investment would probably be different from funding, right? Because when you're investing something, you are looking for that clear ROI. But funding in early stage startups is a risky move, because you although you expect your ROI to be there at some level, you usually have to place bets, or rather make investments or fund multiple startups, and maybe 1 or 2 out of those 10 startups that you've invested in will end up giving you that ROI to cover up for the rest of the lost money, right? Now, let's go deeper into the different sources of investment, right? So you can have an investment from 2 specific sources. One is equity and one is debt. Folks, who over here can give me a quick explanation of what equity means?
Equity is basically the certain amount of shares which you own. Again, talking in terms of startup, which you own, the amount of shares you own in a particular startup.
It's like a fixed investment, which is not repay as a debt. So once invest in equity, it's fixed portion of the capital, a fixed portion of the funding.
Akhilesh, this is Sarvanan. Probably when you look at equity, it's about a certain percentage of ownership that you get in the company or the startup, and then it appreciates or depreciates along with the valuation of the asset or that company.
Absolutely.
Based on how it's performing.
That's true. So Kaushal, Rahul, Sarvanan have said, the right things, in Preeti in chat as well has hit the nail on the head. Whatever shares that are issued by a private or a public company, that is known as equity, right? So let's say that I want to buy a stake in, let's say, Swiggy, right? And I kind of pick up a 20% equity stake in that company. That means that I own 20% of that company now, right? And that is a straight cash transaction. That means I have that money lying around. I immediately transfer it to that company to buy those shares for them. There is no credit, there is no debt, or there is no loan. Which brings me to my second point. A second source of raising investment is debt. Now, when we talk about debt, what really comes into our minds, folks? Can anyone explain that a little bit?
So lending certain amount of money to someone with an expectation of getting back the principal with a certain amount of interest added to it. So you invest 100, you give someone 100 rupees and charge them a 6% interest. So you get back 106 rupees. So
okay.
that's in the most basic terms that way.
Absolutely. And that's right. Tushar and Rahul absolutely nailed it on the head. Debt is nothing but taking loan from a bank, or maybe, a government grant that has an interest product attached to it, maybe a mudra loan. All of these are different types of debt instruments that you have to pay back, right? So the people who give you this money as a loan, they do not own any of your company. There is no way that they are owning any share in your company, right? Now, Why do, okay, now when we speak about debt and equity, let me just quickly take a minute to explain the difference over here between why someone would take debt and why would someone take equity. So let's say that you are a startup that is doing really well on revenues, right? You are generating revenues after a certain point of funding, and you do not wish to dilute your stake further and believe that you are able to generate enough revenues and profits so that you can take on a debt and keep paying out the interest on that debt while still continuing to make profits. In that case, that startup would take out a debt rather than take equity. I will explain this a little more in detail. By the way, in case there's any more questions, just keep asking it in chat, people. I'll keep going through it. So Anand, you mentioned that risk factor is reduced for investor. In which case is risk reduced, in debt or equity?
In debt.
Absolutely. Okay, cool. So I'll tell you how that works, right? So how risk is reduced for debt, I will tell you now. So let's say that tomorrow Swiggy, and just a hypothetical example, folks. Let's say tomorrow Swiggy were to go bankrupt. And if Swiggy has any people who have provided debt to them, and if Swiggy goes bankrupt, all of their assets will be liquidated. And whoever, and guess who gets paid out first from that money that is collected after liquidating all of Swiggy's assets? When I say liquidating Swiggy's assets, I mean selling off whatever is remaining in that company. Furniture, like, the assets that they own in terms of land, whatever it is, scooters, helmets, etc. Right? They sell off all of that, and all the money that they get from that, that will be first given out to debt holders. If there is anything left, then it will be split proportionally amongst the equity investors. And that is why debt is less risky of an investment than equity. Yes, Tushar, equity is equal to share in the company. Hamadas, how do they secure their company? Startups fail all the time. Unfortunately, they can't secure the company. Startups fail, it fails, and equity investors cannot secure it. That's just the rule of the game. You invest more and hope that you hit one or two startups that have the right mix of founders, idea, MVP, market. Cool. So there are some questions, and we'll keep taking them as we go. So let's quickly take a look at the overview of what we just spoke about, right? So what is debt? Government grants, bank loans, or taking a secured loan, unsecured loan, or taking a loan from your family. By the way, you can also kind of get a friends and family round done in case you want an equity funding round from your family, right? It doesn't only have to be debt. What is equity? Equity is venture investment from an angel investor or a seed fund or a micro VC fund or a VC firm, right? So Ashish asks, when we invest in debt mode, how are the returns calculated? Are they predefined or basis the profit company growth? Okay, so this is a very interesting question, right? There are different models of debt that have emerged over the last couple of years. One model of debt is straight up interest. You take this much money from me and keep giving me X% per month back, flat out, right? That is one model of debt. A second very interesting model of debt, and probably if you're interested, you all should note this down, is called revenue-based financing. What that means is that, let's say I go to a revenue-based financer and say that, okay, look, I want 20 lakhs of your money for the next 12 months, and I will pay it back by giving you 12% of my revenue for the next 12 months. And that is how I will pay back my loan. Regardless of how much, let's say that, and I'm making, and at the end, I kind of end up returning more than 20 lakhs. That is how the revenue-based financing firm profits. Okay. Just a side note, you can go ahead and check it out a bit more in detail later on, but we will not be going into more depth on that in this session. Cool. Let's move on, folks. Cool. So this is the different stages of a startup, right? And at some level, all of us know this. This slide will look like common sense to all of us, right? There is an idea stage, there is an MVP stage, there's an early stage, and there's a growth stage before an exit. Well, guys, what is an idea stage? An idea stage is nothing but something clicks in your brain. You have a conversation with a friend, maybe you meet someone for tea, and you say, hey, let's start this business together. That's your idea stage. That's where you get excited, you sleep over it, next morning you still feel good about it, then you ask your family and friends for money. They give you your first round of funding, you go ahead and you kind of incorporate your company and whatnot, and you start losing money right there, right? And that is what the blue line shows. guys, any startup that has been incorporated trying to do something new and innovative will be in the negative in terms of profits or in terms of cash outflow. You will be spending more cash than you will be making at the beginning. That is the idea stage where a lot of testing, a lot of experiments keep happening. Now, what is the MVP stage? Because MVP stage is your minimal viable product, where you have created your very first version of a product that works, that you can go to an investor with, and now you're eligible for seed funding, right? And this is where you go ahead and you kind of start sending your pitch decks everywhere, right? You start sending your pitch decks to angel investors, you start sending your pitch decks to seed investors or micro VC funds in hopes of getting that first $50,000 or $100,000 round valuation, 100,000 equity infusion. By equity infusion, guys, again, I mean getting $100,000 worth, $100,000 money in your bank account while giving some percentage of your company to the person who gave you that $100,000. That is equity infusion. Now, then comes your early stage, right? It is really in the early stage when you start making some money, when you start generating some revenues. You need not be positive on the profit front, but you have to, but by now you should start generating revenues, right? And that means that you are eligible to start getting noticed and start getting funded by pre-series A or series A investors at this point. Right? This is what early stage really comprises. So you go from an idea stage where you ask your friends and family for money. You prove that, yeah, here is an MVP that I can sell to big time investors. You go to angel investors and you go to seed funds or micro VC funds. You ask them for money. They give you $100,000. And you're still losing money, by the way. But you started, you may have started generating revenues. But before you go on to your next round of funding, that is the pre-series A or series A, your business model should have been proven in some way or form, or at least your market should have been proven. And then you get that series A, pre-series A ticket size of funding, which can go up to $2 to $5 million. Again, that's a median number I'm using. There are startups that have gotten seed funded for 8 million, but those are outliers and not something that we will be covering in this session at all. Then comes growth stage. Now, growth stage is anything that is above, let's say, a series B round of funding, right? Now, what's happened in your startup life cycle is that your startup has kind of streamlined its business model and is starting to explore new business models, right? The team is in place, the tech is in place, and you're ready to expand and hyper scale at this point. And now you're really bringing in the revenues. Your profits may still be low, but it's ideal that there is some level of profit, but your revenue is really high at this point or is ramping up because of that hyper scale. And then what happens is that once that investor, whoever has put money into your company, feels like they can't add any more value to you, or your valuation is getting too high for them to keep participating in future funding rounds, they exit from your company. What that means is that their equity shares in your company get allocated to another investor who invests a much larger ticket size or a much larger amount in your company, right? A classic example of this is Flipkart and Walmart. Now, what happened was, there were a lot of investors in Flipkart who wanted an exit because they had invested in Flipkart right at the conception, at the idea stage, at the MVP stage, in the early stage. But they wanted an exit from all of those investments. So when Walmart gave an offer to acquire 77% of Flipkart's shares, all of these people who had invested earlier on in Flipkart sold their shares to pool into the 77% and give it to Walmart at a much higher valuation, right? So I'm just going to quickly take a look at chat to see if there are any questions. Cool. So Chris asks, when an investor invests big money, 10 million plus, would they give it up all upfront, or is it in installments that are goal-based? So in the venture world, Chris, typically what happens is, or typically what a founder should look for is cash that comes in upfront, right? And that typically comes with giving the VC that put money into your company a seat on the board of directors. So there are a lot of cases where startups do accept money in installments, right? But that is not one of the best practices to do. You want money upfront, because let's say that something goes wrong and a time like Corona hits, the VC will cut your funding off. In that case, where are you going to go? And there are plenty of other examples, that kind of vouch for the fact that on a term sheet you should probably only take once in a an upfront investment from a VC. Cool. So Mrudul asks, how does a company like Dunzo manage getting debt whose burn rate is around 5 to 10 crore per month, even though working in only few cities? So again, Mrudul, I'm not very sure if Dunzo has taken up debt. It seems a little unlikely that it has debt. But if it does, then it's probably a secured round of debt. It's probably not unsecured. So that is how they might have raised the funding. Tushar, we unfortunately will not be going into pre and post funding valuation. We can do a completely separate VDP on that at some point. But for now, that will become a little too in-depth than what we want to go in the next 5 minutes. So folks, in the next 5 minutes, have a couple more things to go ahead with. So here is a very quick landscape of the different stages an investor comes into the ecosystem, right? So again, I explained what a seed fund is. I explained what a micro fund is. I explained what an angel network is. And I explained what your early stage VC is, right? So let's say, so again, seed funds and micro funds, some examples of seed funds are 100x VC, iSeed, we have, Bloom Ventures that can be classified as a seed fund as well. And then we have your early stage VCs where Bloom also falls in. You have Chirate Ventures as an early stage VC. You have Matrix Partners, Axel Partners that are early stage VCs. Now early stage VCs, folks, over here I typically mean Series A investors, right? Anything before, again, if you would have asked me this question that, hey, what comprises early stage VC in India? 4 years ago, I would have given you a different answer. I would have probably said seed and pre-series A, but today that probably has changed. Early stage starts from, I think, pre-series A or series A. That is where Sequoia, Axel, Matrix, and Chirate really tend to go ahead and invest their money. Now, Bloom usually comes in during the seed and pre-series A rounds. They've also been known to come into series A rounds of funding. We also have a lot of angel networks, right? So the very first thing that we spoke about is that you go to your friends and family. After that, you raise money from angel investors. Now, angel investors, folks, they don't usually go ahead and invest money individually in startups. What has started happening a lot is that they form a syndicate. A syndicate is a group of people investing together in the same startup to mitigate risk, right? So let's say that Rajan Anandan, for example, one of the heads of Sequoia Capital, says that, hey, I think this startup is good and I'm going to invest in it. He may not invest in it all on his own. He may go find 6 or 7 other of his friends who are HNIs or have a ton of money, in layman's words, to invest along with him, right? And that is when a syndicate is formed. And that is when we say that Rajan Anandan has led the round of funding, because he's the one who got the initial startup. He's the one who lobbied for it. And he's the one who asked people and convinced people to put their money in. Now, who all are part of a VC firm, guys? And the reason that I bring this up is it's important for you to know this so that you can guide startup founders when they come to you, right? And ask you, hey, who do I reach out to in this VC fund? And you're able to give them an answer. So let's look at the hierarchy of a VC fund. And the most junior person in a VC fund is an analyst. And then a rank above him is an associate. After that, it starts getting a little dicey, right? Because you have a principal or a vice president. Some funds call it a principal, some funds call it a vice president. And then again, above that, you have a partner or a managing partner. And then above that, you have a founder. Usually, founders and managing partners are usually, they're pretty much the same people, except for in a few VC funds. Now, let's say Chirate Ventures, they have 2 founders, but they have 6 partners, including the 2 founders, right? Now, in terms of who you need to reach out to, you need to reach out to the associate, the principal, or the VP. And if you don't get a response from them, hit a note to the partner. Right? How do you know which partner to go ahead and talk about, to send an email to quickly? Let's take a look at Sequoia's website, right? Now, let's say that if I were a founder, Ashish will take that question right after this really quick. let's say that I want to figure out in Sequoia Capital's website who I need to reach out to, right, for my particular startup. I go to their website and I look at whatever is there closest to a team page, right? So I'll kind of navigate here. There's nothing here. People may be the closest. I click on people. I go to investment advisors and I start looking randomly at people, right? So let's say this gentleman, let's click on his profile. So over here, I can see the previous companies he's invested in, right? And I can make a broad guess as to what sectors he likes to look at. And if your company is a part of that sector, then this is the person you should be writing an email to, right? Or someone in this gentleman's team, which is kind of like mentioned it was mentioned right here. Okay, we can also go into investment analysts and kind of look at the same structure, right? Kind of click on any of these people and it'll show you what previous investments they worked on, and you'll be able to figure out who to reach out to. Now let's take a look at another example, right? Let's say Bloom Ventures. So you kind of navigate to their team page. Let's say you click on Sajid Pai and you read his bio. It says that at Bloom, Sajid supports investments in media, edtech, commerce. There you go. So now I know that if my startup is in media, edtech, commerce, I have to send an email to him. And I can get his email, let's say from his Twitter maybe. Let's click on his Twitter. There you go, email sp@bloom.vc, right? So mostly VCs are very open about their emails. They want you to send them pitches. So it's very simple to find out who you have to send an email out to. Cool, folks, we can quickly get into Q&As. I've been answering questions as we go. That's all I had from a perspective of, giving you all the information that was in the scope of this VDP. Now let's quickly take a couple of questions and we'll kind of go ahead and close this out.
Okay, Akhilesh, thanks a lot for the session. So we can take one or two questions right now, and then we'll have a Q&A at end of the entire VDP, and we can take the other questions then. Does that work?
Yes, let's go ahead.
Okay. Ashish has a question about the role of each one of them in a VC org. I think that is
okay, cool.
An interesting thing you could cover quickly.
Cool. Let's take a look at it. So what does an analyst do in a VC fund? An analyst literally goes ahead, looks at traction, looks at tracker, looks at in-tracker, and they figure out which startups they need to cold email in order to build a pipeline of startups for them to meet. Right? That is one of the roles of a VC analyst. A second role of a VC analyst is to actually go ahead and drive as much inbound interest as possible. Kind of create their network so that they get organic leads in terms of startups coming to them. See, we have to understand that a venture capital fund is also a business, right? They are making money off this. They have to, like, the way they live off you is kind of funding your startup and hoping it does well. So they need good startups to come into them and ask them for money. There are so many VC funds in India now. This is getting very competitive, and that kind of expands an analyst's role, in which they have to organically drive inbound leads to a VC fund. And they also have a lot of research work to do, in the sense that they do a lot of work around creating a thesis for each sector in India that that fund is looking to get into, and understand why they need to invest in, let's say, the edtech sector or fintech sector, right? Now, an associate leads deal teams. Let's say that a startup does come through the pipeline. He's the one meeting these startups along with the analyst, and he's the one who's actually taking the call and pushing it up to the principal or the VP. Now, the principal or the VP is the person who is typically sitting on the board of these companies that are getting funded, right? And the principals and VPs are typically the ones who are leading the rounds of funding within that VC fund, and kind of trying to get more and more VC funds to invest with them in that round if needed. Now, a partner, managing partner, and a founder, their major role is to do the admin of that entire company, and to be the face of that brand, and to drive as much brand positioning activities as possible on social media or in the news, or by doing interviews or talks or fireside chats. So that is their role, right? All of them are involved in meeting startups, and all of them eventually speak to every single startup that their fund actually goes ahead and invests in. But these are the little microcosms of their daily activities.
Akhilesh, can you also quickly add a line about LP? Ujjwal had a point about LPs, founders who may not be the guy who puts in the most money.
Okay, so I'm not sure what you mean in the brackets, Ujjwal, but I can also definitely cover what LPs are. So LPs, okay, let's say that you have a VC fund, right? VC fund, how is that fund made? You have to have someone giving that fund the money to create that fund, right? So how it works is you have two sources of capital within a fund. You have a general partner and you have a limited partner. Now your general partner is no one other than this guy, the partner or the managing partner, right? So this is your managing this is your general partner in the fund who contributes to probably up to 3 to 5% of that entire fund value. Let's say that there is a $50 million fund created. Your general partner contributes up to 3 to 5% of that fund. So maybe he'll be contributing 2.5 million to that fund. And the rest of the money, the rest of the 47.5 million will come from people outside who are HNIs or maybe endowment funds or maybe institutional funds that give money to this VC fund to go ahead and put into other startups. So that is what an LP is.
Cool. Thank you so much, Akhilesh. We'll have one last very quick question. Tushar wanted to know, does a startup cover all funding stages or can they skip some of them? Give a very quick answer.
So I think that startups do not typically, or at least in India, they have stopped skipping stages. It's not very important for startups to go ahead and take a seed round or take a pre-series A in case they already have a team and an MVP and a proven market in place. They can just directly skip to a series A, right? But then there are certain companies in India that are revenue-based financing startups specifically that have raised $2 to $8 million in a seed round. So the landscape keeps changing as innovation gets better and better.
Okay, thank you so much, Akhilesh. Thank you for this amazing presentation. Guys,
No
we
problem.
have
My pleasure.
We have a
Awesome,
poll
Akhilesh.
in progress on all your screens. Please take out time to give us honest answers for the polls. And we have answers coming in. We'll also share the presentations and the other things with you post the session. Arzu, can you make Nikunj a co-host?
I already see the share screen option. So I guess I'm already a co-host. Hello.
Yeah. Nikunj, you can prep and we'll just start in a minute.
Okay.
Akhilesh, we have a lot of compliments coming for you in the chat.
Thanks, folks. Thanks a lot. We can definitely do another session and we can go deeper into each of the points that were brought on by people here today. But thanks a lot for the kind words, folks. Hope it was good.
Nikunj, you ready? Can you start?
Yeah, I can start.
We're sharing the results of the polls, guys, on your screen. 98% people feel that this was a very informative post. Thank you, Akhilesh, for the post.
Okay.
And guys, so we moved to the final part of our VDP today. And we moved to understanding how does raising funds for your startups work from a founder's perspective. And we have our own Nikunj taking it for us. So Nikunj, over to you. Thank you.
Are you guys able to see my screen?
Yes.
Okay. So hi everyone. I'll be sharing some of my experience of raising funds through various mediums. So who am I? I think most of you know me. I'm Nikunj Shakkar. I run a company called Data One Innovation Labs, and we have a product called Shopper.ai. I'm avid community builder and networker. So let's go to the topic. Do you guys know that only 0.05% of startups end up raising fund from a venture capital firm, right? So this is a very small number, and the whole process is very difficult, right? So a lot of people, we see all the time that there are a lot of news of startups getting funded, and all of us get excited that this particular startup got funded. There are the amounts sometimes are very huge, and then you go like that is a lot of money, right? But to raise that kind of money, there's a whole lot of effort that goes behind it, and it's very tough. So when you're running a startup, you as a founder, you are focusing on a lot of things, right? So you are building a product, you have to manage a team, you also have to generate business, so you have to look after marketing and sales activities, and along with all of those things, you need to focus on getting money for your startup. So this process is very difficult, and then all of these things are going in parallel, right? So you are also managing your business, and while you are also reaching out to investors to like put in money on your startup. So let's talk about what it takes to convince someone to put their money in your vision, right? So basically, how it starts is one day you wake up, you have some idea, you put something around it, you build a team, you build either a product or a business around it to solve some problem, and then you want somebody to believe in your vision to build a great business out of it, create a lot of employment, create a lot of money out of it, and then convince somebody to give you money to make that happen, right? So what it takes to convince someone to like put money in your idea. So first you need a very solid idea. The idea has to be tried, tested, and validated. So when I say tried, tested, and validated, it's sometimes a lot of you must have seen in Startup Saturday events or any other event that you visit. Most of the people have questions around raising money. So how do I get money from a investor, right? But when you ask them like tell us about the startup, so he would say ki, I haven't built anything yet, I need money to like get started. So most of the cases nobody invests in a startup which is just on paper, right? So when somebody is building a business, there has to be something which the work has been put in, there is a team around it, you have to prove that this particular idea is solving a real problem, and there are certain set of customers who are willing to pay for it, right? So which comes to the next point, which is business model. So it doesn't matter how good problem you're solving, but if there's no business model around it, right, then nobody would put in idea into that kind of a startup, right? So it doesn't matter like how impactful it for life, what kind of problem it is solving, or how it is impacting a lot of lives. If there is no business model around it, it basically like it could be an NGO where you can raise donation, but it cannot be a business where people would be willing to put in money, and so somebody would put in only money when there are chances of getting some returns out of it, right? And the next thing is a team. So when Akhilesh talked about various stages of startup, right? So there was the idea stage, then there was a seed stage, and then there was a growth stage. Uh, so generally, when you are raising funds at a seed state, the idea has a less weightage. The team has more weightage. So mostly in early stage, founders like investors look for founders who are passionate, even if like let's say they are lacking some of the things in their solution that they are building. If the founders are passionate and they are able to like pivot that idea and turn that business around, then there are higher chances that they would end up raising funds, right? So a lot of times this also happens in early stages. So some investor would come in, they would also like put in money and also mentor the team to like build a scalable solution. So team is also a very important aspect while you are raising funds. So either you are raising fund or you are helping a startup which is part of a community. When somebody comes to you with a query around this, like how do I raise fund? These are some of the questions you can ask. Like, what is your idea? Have you validated it? Have you like uh, what kind of traction do you have? Have you got any customers? What does customers tell about your idea? How would you generate money? These are some of the basic questions you can ask to gauge like how that person is doing in terms of business. You can also ask about like why does your team is the best team to build this solution, right? So these are the questions. When you know the answer, you would be able to figure out what kind of investors this person you should refer to. So if they're at very early stage, you can probably connect with some of the angel investors who are part of network. If they are doing like already generating revenue and can raise from institutes, then you can refer them to VC funds or larger investors, right? And the last thing that you need when you are raising funds is a network. So you need to know like who are these people in your network who could connect you with either angel investors or HNIs. HNIs are basically high net worth individual in that ecosystem who are so these could be founders who have already like raised money, a lot of money, and now they also have some money to put in early stage startups, or they might be industrialists who are running their businesses for years, and then they are now looking to like invest in startups. So these kind of people will always be there in your network, who are always looking for good startups to put money in. Then there are like in several ecosystems there are local angel networks. So in Ahmedabad we have something called Ahmedabad Angel Network, which comprises of a lot of industrialists who like meets frequently, and then they also screen startup applications to invest money in. Similar way, there are various others. So Indian Angel Network is there, Chennai Angels is there, Mumbai Angels is there. So a lot of these individual city angel networks are very active. And if you know like people who are part of these angel networks, that helps. Second thing is that there are a lot of people who are so like Akhilesh or Gautam who work with a lot of these investors or VCs. So if you know people like Akhilesh, Gautam, they can help you connect with these people, right? So network is very important part where you are when you are starting to raise funds. Now let's look at some of the funding sources. So how like when you decide that now you have all the ingredients to raise funds, so you have a good idea, you have a good business model, you have a very good team around it, and now let's say you're looking to raise money. So what are the sources that you can try out? So the first thing that you can look for is government grants and funds. So in like after this Startup India initiatives, all of the state governments have also started their own startup related schemes, and also central government has certain funds which they are giving to startups. So in Gujarat, we have a state scheme where Gujarat government puts in 20 lakh rupees in each startup. 10 lakh rupees are given for product development, and 10 lakh rupees will be used for marketing of that product, right? The process for like raising this money, so this money is given as a grant, so you don't need to return this money, right? So the process for this is like you need to be incubated in one of the incubators which is selected by government. So government has given authority to certain incubators in the state. So they accept applications from these incubators. So the role of an incubator is to like incubate a startup, work with them for 3-4 months, understand how they are doing. Once they are sure that this startup is like something which would do good, like they will create a good business out of it, then they will recommend this startup to a state government for this grant, right? So now incubator has validated your idea. They have so usually they ask you to present your plan. Once you do that, they will recommend you to the government. At government end, we now have 2 rounds. So there will be a external committee who will review this proposal. So they will ask the founder to come in and present in front of them. This external committee now will recommend government to with the amount of grant that could be given. So it's not like every time you will get 20 lakh rupees, right? So sometimes they would say that they have already built a product. Now they only need marketing money. So they would only recommend 10 lakh rupees. So that happens. And then there will be final presentation where there will be government officers who would be like at the last screening out would like to talk to founders, understand and make sure that they are putting money in, giving money to somebody real, right? And usually that is just to make sure that there is a real company, real startup, and then they would approve that grant. So this is how the grant works. So I know that in Gujarat this is the scheme. There's a similar scheme in Rajasthan, Telangana, Tamil Nadu, all other states. So all the city leads should like check out all these government grants and schemes in their respective states and should be aware of the whole process, right? Now, from the central government, there are various schemes. So one of the schemes through which we have raised fund is called Needy Seed Support Scheme, through which they put in money up to, I think, 1 crore is the maximum limit. So each startup could get up to 1 crore, and there are various mechanisms to get this money. So it could be in terms of loan, it could be against the equity, and there is an option to like have both loan and equity in certain portions. So this is like part of Needy Seed Support Scheme, and there are two other schemes similar to this through which they support startups. Uh, Startup India also comes up with a lot of challenges, and you can apply to them and get these grants or funds to those challenges, right? So this is one source of funding that, as a founder, you can check out, or you can reach out to like. The next source is angel networks and HNIs, or it could be friends and family or dur dur ke rishtedar who can give you some money to start with, right? So this basically is where like you have built some business, now you want to scale the business, right? So you have proven that you have a good idea, there is a team around it, now you have started generating some business, now you want to scale the business, and this is the time you will reach out to angel networks or HNIs. How to approach them is basically, as I said, through network. So when like you are organizing startup Saturdays or other initiatives, or you are attending similar events by TIE or other communities, they usually invite these people at the session. Best is to like make an introduction, get familiar with them, understand what kind of startups they invest in, and then if you think there could be a good match, then write a email or ask somebody who, a mutual to introduce you guys. So in my case, I have like I met several people in Ahmedabad who are like part of Angel Network, and they did not invest in my startup, but they ended up like connecting me with a lot of other good people, and like those kind of connections really help. So having these kind of people in your network, sometimes if they don't invest, they would become a mentor for your startup. So it is a win-win situation. The next is venture capitalists. So I think Akhilesh talked about them, like the whole structure and how they work and things like that, right? This usually comes at a later rounds after you have raised seed round. Now you want to really grow your business. At that stage. So it is usually pre-Series A or Series A round when VCs would come into the picture. Cracking this round is really, really tough. There's a whole lot of process in terms of how to like approach them. So in the next slide, I'll be going to like describe the whole process. So how to approach all of these people, right? So the first thing you can do is cold outreach. So all of these people are very active on social media, especially on LinkedIn. So make sure who are these people, and you can simply drop in LinkedIn message that I would like to. I am a founder of this particular startup. This is what we do, and it would be great if I can get some time to like discuss this with you, right? So this always works. Most of the VCs always have their email IDs published on their website. So it is okay to write an email describing your goal. Like you can tell them that I am requesting a meeting, and this is what I do, and this is the purpose why I am requesting this meeting, right? Third thing that you can do is attend a lot of events where these people are present, make an introduction, get their business card, and then later on write them an email that we met at this X event, and then I'm the founder of this company. This is what we do, and if you are interested, we can discuss further. So that is one way of like reaching out to them. Second is to take part on in pitching competitions, right? So Kickstart is the best way to like get in front of a lot of investors. So because like in Kickstart, we usually have 10 to 15 investors present, and so once you pitch in this kind of a competition, there would be at least 2 to 3 investors who would come back, and they would want to discuss with you further, right? So that also helps. We recently got in top three from a pitching competition, which was organized by CIE at IIT Hyderabad, and we also got an like a term sheet from them. So that is a best way to like be in front of a lot of investors, and usually a lot of incubators or other communities also organize similar pitching competitions, so you can always look for them. Okay, so now let's say you are doing all of this, you are reaching out to people, pitching your startup idea, pitching a business plan, and somebody is ready to put in money, right? So what will happen next once they have made the decision? So they will send something called a term sheet. Term sheet is basically an agreement between you and the investors. The term sheet will like contain a lot of conditions, like how can you utilize those funds which are being invested, what is the valuation of your startup, how much equity that these people will get, and there are a lot of other terms around what you can do, what you cannot do, what would be their intervention in terms of the day-to-day business decision making, and those kind of things, right? So a lot of people make mistakes when it comes to term sheet. So the common mistakes is they don't understand like all the terms which are described in the term sheet, and sometimes they would give away a lot uh, in return of they are getting very less value. So it's not like always about money. So a lot of people, once they see a bigger amount, let's say 50 lakhs, 1 crore, or a couple of millions, they would ignore other terms. But that is where the major mistakes are made. So you have to figure out, like with this money, what kind of other responsibilities are coming over, and how will these investors help you in raising the next round of funding, right? So it's always about like uh, getting at the next level, right? So if these are the set of investors who would help you reach out to like other networks, other investors, either they would help you in getting more business through their network, things like that. So when you are signing a term sheet, you need to like check for all these kind of terms. It's best to like take an advice from a legal person to understand all these terms in details and then sign the term sheet, right? And one last thing that I would like to share is there are a lot of people in the network who are like fake investors. Like so, they would never invest in any startups, but they would just like talk to you, waste your time. So you need to be very like aware with whom you are sharing details, whom you are engaging further, and then like based on that, you need to like sometimes need to do a background check, like what kind of startup this person has invested before, like what is the process and things like that. Another thing that you need to be aware about is when usually it comes to a VC firm, you will be talking to an analyst, right? So analysts usually have a formula through which they will they will put your startup in that formula. So the formula usually comprises of your like domain knowledge, the kind of revenues that you are generating, and things like that. Now this person is will become your salesman to their like partners and other people. So sometimes what happens is a lot of founders make mistakes in talking to analysts. So when you are getting on a call to with an analyst, you need to do a research and try to understand like what kind of formula does he have, right? So you could either talk to the founders who have already raised funds from that VC firm and who have spoken to like analysts from that team, right? So they would give you certain pointers in terms of what kind of inputs this analyst look in a startup before like engaging further. So a lot of time, like even though you have a good idea, good business, but if you fail to like impress the analyst, and if that is the best VC firm for you, they would never like get your pitch. So analysts, like cracking this analyst is very important. So you need to figure out all those things before like getting on a call with analysts. So I think that is it from my end. I'll now like answer all the questions.
Thank you so much, Nikunj. Guys, can you just keep putting the questions in the chat, and I'll take it up with Nikunj. or if anyone has any questions, compliments.
So I'll start answering questions from the chat.
Oh, we have a poll also coming up. So the poll is running. Nikunj, we'll come back to the thing. Let the questions pile up in the chat, and we'll take all of them in a single flow.
Hey guys, we have some interesting questions coming up. So please, choose or please fill in the questions fast so we can move on to the next ones. So we have around 30 or 20 odd people still left to answer the polls. So people on the phone, people who are out, please come back. Please fill the form.
Thank you guys for filling the poll. So we have one question from Gautam. What are some don'ts with VC conversations, Nikunj? Like, what are some strict no-nos in a conversation with VCs?
So when let's say you're talking to VCs, once you pitch, they would ask certain questions. So never explain your answers in detail. So be like very specific about the numbers. Do your homework in advance, and then never go about explaining the answers. So let's say you have seen what is your uh, uh, repeat customer ratio or something like that. You give a number. If they ask further, then explain. Otherwise, don't explain. So because if you go on to explaining them, then it's like it comes as a defensive mechanism, and then they would lose interest. And in all these conversations, usually you will have a time of 5 to 8 minutes to pitch, and then again 5 to 8 minutes to answer questions. So it also works in your favor if you be very crisp. And that way you will be able to accommodate more answers, more questions from the VCs. And there's always a follow-up meeting where you can explain them in detail how the business works and things like that. So when you are pitching as a part of competition or in a group, be very crisp, very short. Do practice your pitch. A lot of time founders don't even get to the slide where they are asking about the funds, right? So how much money they are raising. So they would spend a lot of time explaining the business model, the idea, the problem statement, and things like that. They don't even get a chance to talk about financials. So be very specific. If you have 5 minutes or 8 minutes, practice your pitch for that specific time. So each slide
Nick,
have a time. Yeah.
We also have Romil asking, how does one tackle analysts approaching startups? Right? A bunch of analysts keep pinging startups saying that, hey, this, that, this, that. How do you also tackle that? Can you just add that also as a part of the answer?
So in our case, we have received a lot of interest from the analysts just because we are in a space which is very hot. So machine learning, AI, analytics, everything that interests a lot of people. So in our case, there were inbound reach out from these investors or VCs, and that is because you are visible in the network also, right? So when you receive a request from analysts, they are basically, so as I said in my presentation, you need to understand their investment thesis, right? So they would have certain criteria. So these criteria are usually about the revenue that you are generating, how different you are from your competition, what is the USP, how will you scale your business, and those kind of questions. So it is very technical. So you have to be very specific about those answers. And that is where the once you get go from analyst, then you will get to go further and have a second round of meeting. So talk to the founders who have already raised from that particular VC firm, understand their investment thesis, and then prepare your pitch. One thing I forgot to tell you during my presentation was so for each and every kind of a pitch, you will have to have a different kind of presentation, right? So it's not always like one deck that you will prepare and you will present everywhere. So if you are pitching in an open competition, some competition where a lot of audience is there, then you don't want to reveal so much detail. So then you limit all the details that you are revealing. Let's say when you are talking to one-on-one, then you can go on and share more on financials and things like that. When you are getting grants, there also there's a different kind of pitch that you need to give. So all of these people have a different motive to put in money. So you need to understand what is that motive, why they are putting in money in your business, and then pitch accordingly. So like from and each time you pitch, you will get certain inputs from the investors. So you will have to revise your pitch based on those feedbacks. So keep on improving the your deck, and then it will become better uh, with every pitch. Akhilesh, Manoj has asked like how long does it take to get government grants? So in our case, like in Gujarat, they have a frequency. So every 3 months they receive these recommendations from the investors, and then they set up something called a committee. So after screening committee, it will usually take 1 month or 1.5 months time to like release funds from government to the incubator, and then another 15 days from an incubator to a startup. So in total, it would take about 4 to 5 months. Like so, sometimes it happens early. So let's say uh, incubator sent a recommendation early, and then after like 15 days, there was a screening committee. So then your startup would pitch into that committee, right? So, but usually after your screening happens, it takes about 1 month or 1.5 months to get the funds uh, from the government.
Guys, we have a poll running. Can I request all of you to please take out time and fill it up?
For sure, man. Gurgaon, yes.
So Gautam had a question as a Headstart volunteer. What would be the best practice when a startup reaches out to us for a investment funding support? So like when as I said, mostly when these founders reaches out to you, you might have a like rapport with them. You know them, like how they're building their product and like how they're running the business, right? So if you have those insights, you would know like where they stand and which kind of people you should introduce to. So let's say if they are very early stage and they need a very small amount of money plus a lot of mentorship, then you can always connect them with angel investors or HNIs in your network who are from the similar field who can guide them in scaling their business. Let's say if they are doing really well and then they could use uh, uh, more money to like grow their business, then you can have them as a part of Kickstart or connect to investors which are coming to Kickstart, right? So you need to understand like that idea, how scalable it is, the team, business model, those questions once you ask, then you would get the idea which kind of people. And also sector also plays a role. So some VCs, like Akhilesh said, some VCs only look at some sectors. So then you would also need to aware about the sectors of these VCs and connect them accordingly.
Thank you so much, Nikunj. Thank you guys for joining. We have a question from Sagar. Common mistakes startups make while approaching VC via mail. Don'ts to remember while writing the first mail to VC. Can you quickly, in a minute, help us with that?
I can. Let me show you one of the emails that I have written. I think that should help. Just give me a moment.
Yeah, that would be great. Guys, we have the live poll results on the screen, and we have a clear Gurgaon is leading in the next ecosystem they want to hear about.
I think, first of all, thanks everyone for a very positive feedback. If people still, have some thoughts on where we can improve, do ping us, do share with us. That is an area we'd all love to work towards. The Gurgaon seems to be the favorite chapter next. Thanks to some bias created by myself and other people, but certainly Gurgaon and Hyderabad, the next two chapters will work with on getting them into the group as well. One important thing that we wanted to understand was how often we do this. It is very good to see a very close between a week or once in 2 weeks. I think it also talks about this concept being more relevant, and that's why being asked for that. I think that's a great thing. We'll experiment with both once in 2 weeks to start with, and then there are just so many things we want to cover. We'll see how those goes, and if possible, we'll try to go with a once a week as well. The fourth question that we had was regarding the the journey. The topic next, I think the one clear winner over there was the journey of a startup. I think that's a very interesting topic. So we'd love to bring something in that lines in the next session. And I think, one clear understanding was the deep dive is what people need. So that's again a good feedback for us. So thank you so much for filling the form. It's the highest ever response you'd get from any of the forms. So that is something that we'll take in and work on.
Hello.
Yeah, Nikunj.
Yeah, so this is the email that I wrote back in December when I was in Bangalore. So there's a Startup X Seed investor team. So this is the format that I use. So name, like what we do, like describe the solution in little detail, then talk about some traction, like how many stores are integrated and things like that. We are currently looking to raise an investment. I am currently in Bangalore and I would love to meet. And then attach your pitch deck, right? So this is the format that I use. You can like customize here, like when you talk about traction, and other things like are very straightforward. So most of it, like I think I have received response for this, right? So once so Ravi from Startup X team replied that he is traveling, but review the details and then get it. And then later on, he connected with me, with his teammate. So usually, if you follow this process, you would definitely, in 90% cases, you will get an answer.
Thank you, Nikunj, for this. Thank you, Akhilesh. Thank you, Harshdeep, for these amazing sessions. Hamad, over to you.
Hey guys, I think excellent work. To everyone here, I just want to, tell how much preparation. I've been a spectator for what the team is doing, right? I think Harshdeep, Akhilesh, Nikunj, OG as well. We had a dry run. We had an entire session yesterday with a few of the volunteers like Priya, Shravya, and a few of you who were there, Divyansh and others, right? So much preparation. I think fantastic. I think the content was really well put. And I mean, the results show for itself, right? I would just like to cover a few things on Headstart Catch Up as a initiative. So if you really look at Headstart, what Headstart does is, I mean, though we talk about our vision as changing the world through entrepreneurship, the way it manifests itself as, we initiatives get executed by volunteers in a specific geographic location. Right. So a lot of impact is geographic centered, right? So what that means is a lot of like volunteers are only having access to people from a specific geographic location, right? Like what happens in Raipur stays in Raipur so far. HS Catch-up is one activity. It is an internal initiative, just like the way we do monthly Startup Saturday, we probably would do fortnightly Headstart Catch-up sessions. Idea is this is one initiative where all the volunteers at Headstart come together, get to know about various topics, and we are committed to make sure that all the topics covered are relevant for 100% of the people. One other activity that it also serves as is in an organization, right, there is a lot of gap between, like, I mean, if you see volunteers, right, within your team, you ask them, who do you know at Headstart? They will talk about a Gautam or an Ujjwal or an Amit, right? Not many people really know that Akhilesh can be reached out to, or Nikunj can be reached out to help with their buddy startups, right? So we will, over time, we will have a lot of senior volunteers take sessions, and we will build strong credibility, autonomy around these people. And the idea is to have one team, people reach out to people, people learn from people and support each other and do awesome. Thank you so much, everyone, for being with us. See you when I see you.
Thank you guys for joining us. Thank you.
Yeah.